Hey, how are you? Today I'm just going to talk briefly about private mortgages, what they are, who uses them, and yeah, we'll just take it from there. So, private mortgage is pretty much investors. It could be an individual, it could be a group of investors that just have money and they want to put it into the mortgage space to get a return on the money. So it's traditionally not, the funds don't come from your banks or credit unions, trust companies, etc. But they're still legitimate funds. We see a lot of different reasons in the Canadian mortgage space for private money. A lot of it could be all the way up to, say, builders, for example, who are building a couple of homes or condos. Until you're established in Canada, it's very difficult for builders to get money from the bank, etc., until they put a lot of projects together. If we just talk about traditional borrower, could be again somebody building their home. There is construction programs through credit unions and banks. They can be a lot of work sometimes, and sometimes it can be quicker just to do a private mortgage, get the work done, and then go back after the work is done to the institution to get a low rate mortgage put on. Typically, somebody buying a home, buying a condominium, maybe they've got a good down payment, but their income or their credit is just not where it needs to be. Again, any traditional lender without the income is not going to do that mortgage. So private mortgage will step in and do that. Now, when it comes to down payment, guys, and equity, private mortgages, because they are considered more high risk, they're not going to go up to 95%. They'll traditionally go up to 75 or 80. So there's got to be equity in the property. Another example would be second privates, which are small amounts, maybe 50K to 100, usually no more than that. It could be for someone who's maybe selling their home and needs to renovate, trying to get the value of the property up. They don't want to break their existing mortgage, so they put a quick private on. Or somebody who maybe just has to consolidate some debts. They've gone back to their institution that they have their mortgage with. They can't do it. They do have the equity, but they just can't qualify. Again, they can do a quick private. You got to remember that private, guys, is very much a quick fix solution, 6 months to a year. So, if you were obtaining this money, you do need to have an exit strategy. The lender will want to have an exit strategy. You don't want to be carrying a private mortgage for a year, 2 years, 3 years, because it is expensive. However, it can definitely fill a lot of gaps over the short term. There's a large need in the Canadian mortgage financing world for private mortgages. It's not shady or anything like that. There's a legitimate need. Canadians need access to this money, and private mortgages fills that space on a daily basis. If you need more information, feel free to give me a call, send me an email, check out the website, etc., and we'll take it from there. Okay, have a great day. It was great chatting to you. Thanks for your time.